I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, the Federal Reserve is taking it slow and steady. If you checked LibertyNation.com at 2 o'clock p.m. Eastern Standard Time on September 17th, you would have learned that the U.S. Central Bank lowered the benchmark federal funds rate for the first time in 2025. The Federal Open Market Committee, or FOMC, voted 11-1 to implement a quarter-point reduction, bringing the target rate to a range of 4% to 4.25%. While this was widely expected, traders gazed into the Fed's crystal ball, hoping to see a flock of doves. What Wall Street saw was the Fed penciling in 2 more quarter-point rate cuts this year. But what was surprising was the Fed signaling just 1 quarter-point rate cut in 2026 and another reduction in 2027. Altogether, monetary policymakers think the federal funds rate, which influences borrowing costs for businesses and consumers, will settle at around 3% by the end of 2027. By comparison, heading into the meeting, investors projected the Fed funds rate settling at 2% by the end of next year. Ouch. Or is it really all that painful? After the New York Stock Exchange slipped on it for a while, investors turned ultra bullish during the September 18th trading session as the leading benchmark stock market indexes picked up gains of about 1%. The 10-year Treasury yield appears to be indecisive, hovering around 4.06%. The US dollar index topped the 97 mark, with the greenback celebrating that the Fed might not be as aggressive as initially anticipated. Ultimately, by taking a slow and steady approach to monetary policy, Fed Chair Jerome Powell sent a message that the sky is not falling. Now, let's summarize what he said about the US economy. Inflation will likely rise because of tariffs, but it will be short-lived. In other words, transitory. The US labor market is not collapsing, but rather facing a low hiring, low firing climate. Immigration is reducing the supply of workers, but trade uncertainty is also preventing companies from laying off employees or expanding payrolls. The economy will perform better than the June projections. President Donald Trump and his team demanded aggressive rate cutting. Trump wanted 3 percentage points lower. White House advisor Peter Navarro wanted 50 basis points in September and another 50 basis points in October. And Treasury Secretary Scott Bessent suggested 175 basis points worth of cuts in the coming months. If the Federal Reserve followed through on these demands, it might have sent the wrong signal to the nation that the economy is teetering on the brink. For now, the most important meeting of the year has come and gone. But one noteworthy thing did happen. Jerome Powell introduced a new term to the Federal Reserve textbooks, risk management cut.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
In 30 years, reporters will look back at this phrase in the same way we reference Alan Greenspan's insurance cut comment in the 1990s. That's it from this week. Please read my full stories on LibertyNation.com and be sure to check out my previous Swamponomics TV videos and interviews. Liberty Nation does not endorse candidates or campaigns or legislation, and this presentation is no endorsement. Thank you. I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the